And now for our currency of the week, pound dollar. God save the Queen. First and foremost, the elections. So on Thursday night, there were exit polls. They told us no majority for the Conservative Party. Remember that Prime Minister Theresa May went to the elections in order to enlarge her majority, to have a stronger hand in the Brexit negotiations, a stronger hand against her Brexiteer peers in the Conservative Party. She expected to enlarge her majority from 330 seats to 350, 360, 400. The end result was only 318, okay, under 326 needed for a majority. The pound fell immediately. However, the Labour Party gained less seats, only 262, and May can still form a government. There are negotiations between the Conservative Party, led by still Prime Minister Theresa May, and a party called the Democratic Unionist Party in Northern Ireland. They have only 10 seats. They are like the Republican Party in the United States, climate change deniers, anti-abortion, anti-gay rights, something that is out of the mainstream in most of the UK. So anyway, there's a question for how long will she cling to power, because the knives are out. People like Boris Johnson are worried, okay? So the pressure continues on the pound. On the other hand, well, yeah, so there were reports yesterday that they reached a deal, but it's not certain at the moment. And there's also criticism about this deal. And there are other people pulling in different directions. David Davis, the Brexit minister, is talking about a hard Brexit. On the other hand, in Scotland, the Conservative Party, the Tories, they won 12 new seats, and they want a softer Brexit. Okay, next Monday we're expecting the Queen's speech, which means the vote of confidence for the government. And then also the Brexit negotiations, everything to begin on the week of June 19th. But if we don't have a government, everything can be delayed. We need a stable government in the UK for the pound to rise, and we need a softer Brexit. So rating agencies already warned about Britain. If we have new elections, if there's no deal with the DUP, if the knives are out on Theresa May, we could have new elections. They could delay everything. But a government led by opposition leader Jeremy Corbyn, leader of the Labour Party, could provide a soft Brexit. Again, we heard from the German Finance Minister Schäuble and French President Macron that the door is open for the UK to regret Brexit. Next big event, we also have economic figures. We have the jobs report today. Watch out for wages. We have retail sales tomorrow. The Bank of England, here, Mark Carney in the picture here, biting his fingernails. He has a big dilemma to raise rates and to battle inflation. Okay, because if we have higher interest rate, then we have a stronger pound. Stronger pound, that means that imported goods are cheaper and inflation will fall. The standards of living will rise. But on the other hand, the economy is weakening. At least in the first quarter, it grew by only 0.2%. And you would like to leave the rates unchanged in order to support the economy. For tomorrow, the bigger question is, did Forbes change your mind on raising rates? That will be the immediate reaction. Okay. All in all, for the pound, markets are mostly interested in Brexit. Soft Brexit, good for the pound. Hard Brexit, bad for the pound. Ongoing uncertainty is, of course, bad. Any kind of delays on Brexit negotiations and the vote of confidence are bad for the economy and for inflation. Okay, so that's our pound dollar special for this week, our currency of the week. Before we move on, I see here a few questions. Question here from Naren Patel. I mainly trade E-minis, S&Ps, which has been on a bullish run since price broke out and stayed above 2,400. And Naren says, I've noticed the impact on markets from interest rates rise does not seem to affect it as much as in the past, only currencies. Yeah, so stock markets, I don't follow them very closely, but they continue rising and rising. most days in the US stock markets are very, very slow. Volatility is very low. When we heard about the reports about obstruction of justice from Trump, we had a big fall, relatively big fall in the S&P, a fall of about 1.5%, but that was very short-lived. On Friday, we had a big fall in tech stocks and Nasdaq. I don't know how long that will continue. All in all, markets in the past used to see rate hikes as bad, okay, because investors have more incentive in not buying stocks. On the other hand, it's a sign of confidence in the US economy. So as long as the Fed doesn't surprise markets, I'm not sure we'll have a big impact on stocks. The Fed likes to give us a lot of forward guidance, not surprises. So if they don't raise rates today, that could be a shock for the markets. And that could have a bigger impact on stock markets, but they're probably going to raise rates and provide a very balanced message, and stock markets are unlikely to jump or crash, okay? Another question from Abdullah. What will happen to pound dollar? As I said, a lot depends on Brexit. If we have a soft Brexit, it's good for the pound. And now there's, this morning at least, talk about a soft Brexit because the hard Brexit line that Theresa May put out was rejected by the public. I just think the public was not interested that much in Brexit. But in any case, we're currently seeing a recovery. But if we don't have a government, if we have more uncertainty, it's bad for the pound. That's the general thing. Okay, now let's preview next.